Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn & Associates with your financial market wrap-up. And this is for Thursday, August 10th, 2017. And we're just about 315 and a half, 316. And we've got that pause. We're right at that time. The stock indices stop trading until 3:30, then they continue on. But these are going to be the settlement prices in the market. So you get another half hour of trading after 3:30. In this 15-minute period, nothing takes place. A number of other markets are trading, though, such as the currency markets and some of the metal markets, but it doesn't matter. All I care about for this is where the market's going to finish today for a settlement. Now, the action has been fast and furious for days now. As we know, the rhetoric between North Korea and the U.S. continues on. We get the morning reports, such as we have the PPI numbers, and you trade off of them for a while. But what's been going on is very gradually we've entered the corrective phase in stocks. And it's orderly. That's the important thing. You're not waking up and saying, oh, gosh, we're down 500 points. Collectively, you might end up that way, but that's not the way that that's going. In addition, we're looking at a VIX that has gotten strong, and there are some predictions it might get back up to a 20 level. I don't know if it will or won't. I can tell you each time it gets up on a spike like this in just a few days, it's been coming back. May not be that way given that President Trump, maybe an hour and 15 minutes ago, was again on television, and he looked into the cameras and he was asked about North Korea, and he said his language wasn't possibly tough enough, that they're not to be messed with. I'll be writing about it tonight. And he went into Obama, Bush, and Clinton. They got nothing done in 25 years. He's here to get something done, and this situation is not going to stay as it is. He did hold out a carrot. He's willing to negotiate, but they're going to fire missiles at us in other parts and these threats. He is prepared with 100% of the military behind him to take the situation in control. Obviously a heated affair. Stock market doesn't like that. The gold market does like it. The U.S. dollar, quite caught, doesn't know which way to go. Do you buy other currencies against it or not? You're getting the purchase of the typical safe havens. You've got the Japanese yen up, bonds and notes up. You've got the gold and the silver up at this point in time. The typical safe haven is not crude. It can go either way on events like this. I hear people say, oh, you buy crude in that. I don't know that that is the case at all, but we'll see. The grain markets got terrorized today by very, very bearish USDA reports, way more so than the trade was looking for in terms of the upcoming crop, size of it. In terms of the S&P on the weekly bar chart, you're back down to this uptrend line. That's the important thing to me. You're right back down into that line. What we do from here is very important. Should you take out, obviously, this 2400 area, no matter what kind of chartist you are, you'd have to make an argument that you've lost this slope of the uptrend. Right now, it is still in place, even with this big break that we're having. When you go to the daily bar chart, you truly have a different looking chart. So while the weekly is still okay, the daily is not. You've broken through everything on the daily and holding this zone. So what we have on the short term is a trade top here, and we're extending the potential trade bottom. And you see that beautifully when you go to swing lines, because it's going to take you to the highest high at that 2488.50, and you're already back down to 2435. Now you might say, whoa, that's a break, but folks, it's only 50 points. In the scheme of things, it's not that big of a break. It's a break. That's what it is. You're under the 18-day average. If the market falls down, there's a couple of potential support zones. One of them's the 100-day moving average of closes. So what we have on this chart is a market with no trend in the swing line. It's got a higher high and a lower low, but prices are under the 18-day average, so there's a downside bias. And should the market rally, I would now look for that 18-day average to offer resistance. Support might be the 100-day average at 2406.75. The Bollinger Band is not the support. The band got very narrow, and if you'll recall, I said whenever you get that narrow, I don't know which way or how long it's going to go, but from it, you get a correction. You're there, and it appears that correction's going to be to the downside at this point in time. So you can see what you're doing here. Momentum pointing down, and if you look at these numbers, they did not close in oversold territory. So we have downside bias, we have downside momentum. You're under the lower Bollinger Band. Don't forget you only settle about 5% of the time under it. You're not embedded. So there's room here for the market going into a weekend to do almost anything. And that brings me to asking you a question. How do you feel about the weekend? Next week, the North Koreans have said that they're going to launch their missiles. That's the middle of the month. We know that it's likely, very likely, that this tit for tat, what the president said today, is going to stir the pot, and they're probably going to say something else. Yesterday was loads of nonsense. God knows what it is today with what the president said again. Does that carry the market lower, or do you weigh it off? Do you want to go home long in the stock indices? That's questions you got to ask yourself. Let's flip it. Do you want to go home short them, looking for something to happen and they drop further? Those are the questions you ask yourself. When we come to the NASDAQ, you've entered oversold territory. Here you got a higher high and lower low. You have the same chart picture. You brought in this market like so. You got very narrow. Now you're trying to push the band out to the downside, and you did the same thing as you can see in the S&P. Whoops, I hit the wrong button there. Let's go to the right one here. In the Dow, no chart picture like that, but what the market did do is it lost its bullish embedded reading. The red line is now under 80 at 71. It can recover, but it would have to have a monster rally to do such, which means the odds favor, as I've said this week, if you lose that, you probably see price and the 18-day average make a run at each other. It's 100 points away. It's fairly close. Is there a trend in the market? Well, the trend is turned down as per the swing line. Lower highs, lower lows. However, it's countered because the market's over the 18-day average with an upside bias, and then the key indicator to me, the slow stochastic, lost its embedded reading, which favors the market going back to the 18-day average to regroup and figure out what to do next. When we come to the Russell 2000, first thing my eye sees, oversold. Second, I have a pattern of lower highs, lower lows, and now the market's well under the 100-day average, the 18, and running to the downside well under the Bollinger Band. It will get back to that Bollinger Band, but it can take another 4 days to do it, and there's no saying how low this market can go. There's absolutely nothing bullish on the chart that I can see about it other than saying it's oversold. In the VIX, here's that second day of a rally. We've had events like this before, especially this one, where we broke out, went higher the next day, but then we pulled back. Will that be the case now? And the only thing at market, in my opinion, that would keep me from it, if I knew nothing about Korea, nothing about what's causing this other than looking at the chart, I would think that's the event that's going to happen, just because it's the one that's been happening. That's not a reason to bet that that's what's going to happen. Right now, you've got a market with upside bias that's overbought, well over the upper Bollinger Band. The odds of staying over that Bollinger Band 5% of the time, and you've corrected each time you've gotten over that VIX. That's my point. What you do with it, I'll leave that to you. In the SEP bonds, you've got a market that's now in overbought territory on stochastics. The trend is clearly up, higher lows, higher highs. You're making months lows in the real yields. They're down to 2.21 in the 10-year. I didn't look to see the real yield in the bond here, but we know it's got to be, if you go back on the chart, these are the lowest yields you've had since June. We'll see if it can carry further. When we come into the 10-year, you're overbought in an uptrend, got up to and trying to push the upper Bollinger Band out to see if the market can go. We know it's a safe haven buy. When people are this scared, they buy the gold market, they'll buy the yen, often the Swiss franc, they'll buy U.S. Treasuries as well. So you've got to remember what people run to in times when they get scared, safe havens. The dollar index is stalled, excuse me, right against the 18-day average of closes, and that's what I teach. I teach that when you lose the embedded reading, one of the things the market often does is make a run for that 18-day average of closes, and from there, new trends can develop. And that's exactly where I'm at with you. What we have now is a pattern where the market's got the swing line up, so the trend is up. However, it's countered because the market is refusing to close over the 18-day average. They knock each other out, and momentum is still pointing up. The flip-flop is happening in the euro currency. When it lost its embedded reading right here and started pointing down, it fell back to the 18-day average, and now just like the dollar, it's hitting it and refusing to close under it. It's the flip-flop of it. And you've got to wait for this market to set up something new for you to get with. The Aussie dollar has fallen into support, oversold in a downtrend. Resistance back up at 79.37, completed its objective is one of the ways I look at it. And believe it or not, the yen, with all the craziness, is just overbought. It has hit its upside target, the upper Bollinger Band, and it's having a great problem in getting much over it at this point in time. While it closed at 91.70, the Bollinger Band tops 91.60.5. Yesterday, we finished the day at 91.19.5, and the Bollinger Band was up here at 91.44.90. So you take a look, and finally it got up to it, and it sort of stalled. But it doesn't change things because you still have to wonder what happens over this weekend. In the WTI crude oil, well, so much for the market extending or trying to get up to that $50 or $51 level. That isn't happening. The market has been not able to embed. It stayed overbought. Momentum is now turning down. Prices fell into the combination of support of 48.60 and the 18-day average of 48.47, and the last quote's 48.48. I mean, you're literally right there, but this market has got some issues right now. It's neither bullish nor bearish. It neutralized its uptrend. Gasoline, though, is staying in a downtrend. Lower highs, lower lows. It closed under the 18-day average, and momentum is pointing down. Unless you take out today's highs quickly, the odds favor, that's all I can use the word, they favor lower prices. Should you take out today's highs, because I always balance everything for you, well then, because it's an outside day down, that becomes a bear trap, and the market sets in place a potential target of 169.16. When we come to nat gas, I thought this trade would fail, frankly, against this 290 level. I was certainly wrong. The market's now got a pattern of a higher high, a lower low. When you lost the embedded reading, the whole trade was lost. The hope was that the market would not stay over that. Remember, you're not in a trend, so when I say the hope, it doesn't matter if you're bullish or bearish, but would that offer the resistance? And today, by the end of the day, no, it didn't offer the resistance for the market. So when I look at it all, pretty exciting trade, violence for sure, so the quiet August has come to an end. I want to remind you, a one-year subscription, if you don't have it, to Modern Trader. Now, if you go to their website, you can pay $79 for the 12 issues you're going to be sent by email. Buy them. That $79 will include Market Focus as well, which is great because that's your daily stories that you get to back up what the magazine does, just publishing once a month. It covers FX, options trade, futures markets, derivative trade. I mean, it goes on. And of course, different trading techniques are covered in great detail. And then special featurettes are all through there. It's pretty interesting how you do it. Book reviews, everything there. This is an idea on strangles, to give you an idea. And then, of course, there's always chart studies that they talk about, and this is just an example of what it looks like. It's free from us. Call us at 866-973-2077. We'll get you on their list. You can go to our website, www.iraepstein.com. You'll see a carousel of free offers. You can click up here. If you see me on YouTube, get on the list that way. Or underneath us on many websites, it says click here for Ira's free offers. Do so. We'll take care of it with you. I'm Ira Epstein. You have yourself a good day. Sorry for being so winded, but there's so much to talk about today. Take care.